that you follow on-chain data. So today we're going to be focusing on Etherscan, which is a database querying website for the Ethereum network. So the good thing about Etherscan is that if you learn how to read data using this query system, it will be effectively the same for any of the other EVM compatible chains. So what I mean by EVM compatible is Ethereum virtual machine. So for example, Polygon is an EVM compatible chain. They're a layer 2 of ETH. Finance Smart Chain, Avalanche. So I think they use snowtrace.io, and among many others, they all use the same sort of layout and formatting for querying data on chain. So learning how to do it on Etherscan is going to provide you a lot of value in being able to look at this stuff on a lot of different other chains as well. So what we're looking at here is a transaction that I pulled just from the Uniswap liquidity pool for the ETH USDC pair. And that sounds like a lot of jargon, I know, but effectively all that means is that it's just a random transaction that I pulled from a decentralized exchange. The person whose address this is, they have an ENS domain, which just means that they can change their public key from a string of numbers and letters to something more easily readable, like in this example, CryptoJoe0x.eth. So all that means is that they've purchased a domain to be able to send that as their public address instead of their long string of code. So it just makes it a little bit more user-friendly if you're dealing with someone that's not involved in crypto, or if you want to more easily be able to tell someone what your public key is without having to copy and paste this super long trail of numbers and letters. So I'm sorry if go ahead, Alvin.
Okay, so the domain that you specifically that you just referred to, the CryptoJoe domain, is that replacing the transaction hash? Or
so the transaction hash is like a invoice, or not an invoice number, but you need it. This is the transaction hash up here, and this is what identifies this specific transaction. So it's any transaction that comes on the Ethereum network is going to have a unique ID, and that's going to identify that one transaction. So it replaces the public key, which is if you were to send me money, or if I was to send you money on chain, I would need your public key in order to send that money to you, because that's what identifies your wallet. So all it does is it just makes it a little bit easier to kind of seek out and send your information for getting paid or paying people.
Okay, yeah, I got
Makes sense?
Yeah.
So right now we're looking at the top half of the transaction. We'll go through the whole transaction just to kind of identify this. And I chose this because it provides a good example of a more complex transaction because it's interacting with a decentralized exchange. If you were just sending ETH from one wallet to another, it's more, I don't want to say it's more self-explanatory, but it's less complicated, I guess. So I wanted to provide this transaction because I think it gives a good overview of some of the DeFi activities that we might be interacting with. So like I was talking about before, the top section here is the transaction hash. So that's the unique identifier for this transaction specifically. Next, we have the status. So this indicates whether or not this transaction actually got pushed and published on chain. So some other examples of options here are, it could be, sorry, I'm just looking for my notes here. So you could have dropped and replaced, which would be so the green is indicating that this got on chain, it was successfully confirmed on chain, and this is a valid transaction. You could also have dropped and replaced notification here, which would mean that it was published on chain, but either the user tried to speed it up after the fact, or they that's the most common one, or they replaced that transaction by doing what's called they've sent a new transaction with the same nonce. And we won't get into what nonce is because that's a little bit more advanced for this than for this discussion. But effectively, if it's dropped and replaced, it didn't hit on chain. There's a record of it on chain, but it like the sending didn't actually go through. Now, one thing to note in those scenarios is that you still spend the gas that you tried. So for the time that it was in the confirmation stage, you spent that a certain amount of gas for trying to get that done. So even if it's dropped and replaced and it didn't hit on chain, you may have spent a small portion of gas, which is just the transaction fee for getting things published on network. And then there's a final one that would be red, and that would be a failed transaction. So that could mean, like in the example of a decentralized exchange like Uniswap, like we're seeing in this example here, that could mean that you tried to that would mean that you tried to publish this transaction on chain. So you tried to buy, you tried to swap Ether for USDC in a DEX, but maybe you didn't have enough gas to finalize that, or maybe the price, because the way that these decentralized exchanges work is that you put in a tolerance for how much you're willing to let the price move while your transaction is getting confirmed. And if the price goes beyond that threshold, it would fail because it would no longer satisfy the constraints of what you were trying to do initially. So the three options for the status are success, dropped and replaced, or failed. And I may be missing some other types of status updates, but basically it'll be green, yellow, or red. And red just means it didn't actually, it completely failed. The transaction didn't go through. Dropped and replaced, like it sounds like it was either dropped and you didn't want to execute that transaction while it was getting confirmed, or you replaced it. And then a success would mean, yes, this hit on chain. What happened in the transaction action actually happened, and it's a valid transaction on chain. So moving on, we've got the block. So the block is just the we're talking about blockchain here, right? So each blockchain is a literal chain of blocks, right? So this is just indicating which block number that this transaction was batched in, because each block is a batch of transactions. So it's just indicating to you which block did this actually get put into. Really not that important for us as accountants, because we don't really care what other transactions were in the block, because we only care about this one transaction. But if you want that information, it's right there. And then the timestamp indicates the amount of time, or the date and time that it happened. Now note that this is in UTC. So you need to kind of convert this back to your native time zone. And we'll investigate this once we get into the other part of the call. But if you see here, I've actually created an account within Etherscan. And so I'm pretty sure that you may be able to actually change this time zone so it reflects whatever time zone you are interested in, so that you don't have to do that conversion. So that's the timestamp. Next is the transaction action. So this is just indicating to you, this is kind of like a description of what happened during the transaction. So over time, when like maybe 3 or 4 years ago, Etherscan wasn't as robust as it currently is. So I don't even think that this was an option as one of the line items. It just shows how the space is evolving. Now it shows you what happened. So this user swapped this amount of Ether for 49.30656 USDC, which is a stable coin. And they did that on Uniswap, which is the decentralized exchange. So it's a very clear and concise view of what actually happened on chain, right? So that could vary. It could just be in a normal transaction where you have someone just sending ETH from one address to another. It would just say sent 1 ETH to X address, right? This sponsored section is just they have ads occasionally, so ignore that because it's a free tool. So they have ads on the tool sometimes. And then we see, as we were talking about earlier in the call, we have the from address. So this is the person who initiated the transaction. So as you'll see down here in, actually, if we hover over this address, we can see what the actual public key is. So this person has purchased an ENS domain so that they can have a more simple public key that they own, but their actual public key, the actual underlying address that you're sending to, is visible if you hover over the ENS domain. And you can click on this and it would show you, because remember, all of this stuff is public, right? So if we wanted to click on this, we can see basically the bank account for Crypto Joe, right? So we can see his total ETH balance is 0.7742 ETH. And then he's also got all these other tokens in here. So he's got Wrapped Ether, he's got Tether, he's got USD coin, then he's got some shit coins that got airdropped to him. And then here's his NFTs. So he owns, as we talked about before, he owns an ENS domain, which is an NFT, which you can see here. And then he's got a few other NFTs that might be shitcoin NFTs or whatever. So this is the beauty of the blockchain, right? As accountants, we can follow the data and we can investigate different pathways, right? So this is his ENS domain, and his address acts as his bank account, right? Which we just viewed there. So here we see that he sent this transaction into what was effectively a bunch of different transactions, right? It went from his address to this address, which then was transferred to this address, then to this address, then to that address. And then we can see kind of the ERC20 tokens that were transferred here. So we see this exchange proxy that we see in this section here. And then it got sent into the Uniswap v2 pool. So on the user's end, all he did was initiate a swap. And this is what all happened in the back end, right? Automatically via the smart contracts. So the exchange proxy sent it to the Uniswap v2 liquidity pool for this amount of ETH. So the amount of ETH that he initially sent in, we see it here. And then that Uniswap liquidity pool transferred back to the Coinbase proxy the adequate amount of USDC that he was willing to trade for. And then that transferred back to his wallet. So I'm assuming that this is his wallet here. Yep. So we see that. So effectively what Crypto Joe did here is he sent a transaction into the pool and then he received a transaction in a different token, right? So this public key here is what was eventually the recipient of this USDC here, right? So, and CJ, I know you joined just a moment after everyone. If you want to jump on to, if you want to follow along to this transaction, I sent in the chat the transaction itself, if you want to follow along on your own. So that's the kind of the pathway that this token transfer took. On the user's end, he didn't have to do all these manually. This was all done automatically by the smart contract. And so he just said, I'm willing to swap 0.029 ETH. He saw a minimum amount of USDC that he would receive. If the price changed dramatically outside of that range, it would have automatically failed, but it stayed within the acceptable range that he was willing to do for this trade. And so therefore it got published on chain and he received his 49.30656 USDC. So now we're moving on to the value. So this is the amount of ETH in total that this transaction ate up, right? So he transferred 0.29757 ETH in order to receive 49.306 USDC, but he spent 0.00209 in ETH in order to get this transaction processed on chain. So this is the key of blockchains, right? You can't fake the data because it costs you economic value in order to get your transaction on chain, right? So it's not economically, it doesn't make sense economically to send fake transactions because they won't get picked up and they won't get confirmed by the network. And also it can be expensive. Like you can see here, just to process this transaction. Now keep in mind, a swap on a DEX is more expensive to process than a normal sending transaction. Like if I was to send ETH from myself to Alvin or CJ, that would be cheaper because it's less complex, right? It's just going from one wallet to another. In this case, we saw it going from his address to the Coinbase proxy, then to this address, then to this address, then to that address, then to this address. And so it's a more complex transaction, so it costs more gas because there's more things going on, right? I think the general standard is 21,000 units of gas for a general send. But because these different DEX transactions can sometimes go through multiple different liquidity pools in order to accomplish what you're trying to accomplish, those you have to set the gas limit higher in order to make sure that you get your transaction processed. So that's another option for the success tab, for the status tab. If you run out of gas, so if you don't put in enough gas units, which it will automatically estimate what it thinks you'll need, but if it ends up costing more units of gas than you have available or you've authorized it to use, that could be another option for this, for the yellow kind of dropped, or it wouldn't be a failed transaction. I think it actually would be a failed transaction. It would show up as red and it would say ran out of gas or something like that. So one thing that I failed to mention about this section, the ERC20 tokens transferred section, is that this shows the current value of the ETH, right? And so you see it doesn't really match up with what he received in USDC. But if I click on here, it gets closer, right? Because it shows the estimated value on the day of the transaction. So if you're trying to reconcile this for a client, you can click on this and it'll give you a pretty good estimate of what it actually was worth on that day at that time, right? And so this one doesn't change all that much because it's a stable coin, right? So that there is still a slight difference, 6 cents, but it's much closer than the ETH is because the ETH fluctuates in value a bit more, right? So the same is here, right? We can see the value, the full total value of the transaction currently, or we can click on it and we can see with this little, past icon that it was worth 48.66 at the time of the transaction. Same is true of the gas fees, right? You can click here and see that right now in current ETH to USD conversion rates, it's almost $4, but back on that date, it was $3.4, right? So this is a more expensive transaction on ETH, and the gas fees depend on the usage of the network as well. So that's a key thing to remember as well. So when the network is more congested, it costs more gas because you want to get your transaction prioritized. So you include more gas. And so this is where we see the actual price of the gas. So before I was talking about the units of gas that we have to use. So in the example of me sending ETH to Brian, the standard amount for just the send transaction is 21,000 units of gas. And so you would multiply that by the gas price to get to your total transaction fee. So here, the gas price, which is automatically suggested by the whatever wallet you're using, but you can increase that if you want it to get prioritized and confirmed more quickly on the network. This is the rate that you're paying. So like at the pump when you fill up your tank, it's the price per gallon, and then the gallons are the units of gas that you're actually spending. So that's just a very quick rundown of, and so right here we can see at this time right now, Etherscan gives us an estimate of what the current base fee is for the network, and it's at 214 Gwei. So it's really expensive right now, and the reason for that is there's a ton, I don't know if you've heard in the news about this, but there's this new meme coin called Pepe coin, and it's been going crazy in volume, and it's mostly transacted on dexes, which require a lot more gas and take up a lot more space on chain. So because meme coins are going crazy right now, the gas price is going crazy. It's almost 20 times. Is it more than that? Wait, more than that. Yeah, it's like 20 times what it was on this date. So back on August 3rd, 2022, so in the heat of the bull run, it was only 12.83. And now it's 214, right? So it's going to be more expensive to process a transaction on chain right now than it would have been back then. So that's a quick overview of this transaction. I wanted to just jump into kind of the importance of creating a profile on Etherscan because of the things it unlocks for you. So once you've signed up for Etherscan, which is free to do, you can, if you have clients within the space, you can create things like watch lists. So using the same kind of crypto Joe example, um, you can see here that uh, I can follow his address, right? And I can create notifications. If I want to see anytime a transaction comes into that wallet and I want to get an email notification, I can set up different notifications related to this wallet. So I could either do, right now I have no notifications. I could do incoming and outgoing. I could do either or. And this is also something nice to do if you're keeping your own crypto in a non-custodial wallet and you're worried about maybe it getting hacked or something like that, because it's not, maybe you're keeping it in a hot wallet or an exchange wallet and it's less secure, so you want to be notified if anything happens to it. You can do that as well. And you can also track, so right now these notifications would just happen if ETH was sent, but if you also wanted to track ERC20 tokens, which are other tokens on the ETH network, so like USDC. USDC is a stablecoin and it's an ERC20 token. It's another type of token built on the Ethereum network that allows you to unlock different utility. So stablecoins allow you to transact in what is pegged to the US dollar, so it's more easy and less volatile to use. ERC 721 and ERC 1155 are the NFTs. So those are different types of NFTs. So those are like the ENS domain that we saw in this address. So we can see if he bought a new one or if he sold one. So this would help us trigger. Maybe it would, if we're helping this person with their accounting, it would trigger us to say, hey, I just saw that you had a transaction come through that wallet. Can you give me some detail on it, right? And in that same vein, you can add notes to different transactions. So if I wanted to add a note, I could enter the transaction hash. So I can jump up here and I can go back to, oops, I'm going to jump back to that transaction. I'll copy it. And then I'll go to the private transaction notes. So if I wanted to say here, I just dumped in the Ethereum transaction, which I got from just this little button here, right next to the transaction hash, which I don't know if you were here, CJ, but this just identifies this unique transaction. So if I just paste that in here, I could write ETH to USDC swap on Uniswap. So I could just make a note so that I remember, okay, oh, that's what this was for. So it's more easily accessible. So these are just like memos like you would have in QuickBooks, right? So we can also create contacts. So if your client or you are transacting with common addresses, you could create a contact for them. So it wouldn't actually assign an ENS domain to them like we were talking about before, but it would allow for you to more easily see, like instead of it showing like this wallet address, which is linked to Crypto Joe, you know, you could say, or if he was sending ETH to me, I could say Taylor's the Works wallet, right? And it wouldn't create an ENS domain, but while I'm working with an Etherscan, anytime Crypto Joe sent me ETH or any other type of token, it would the to address would show up as my name instead of the long public key. So it's just easier to look at. So that's about a half an hour of me talking. I just wanted to I'll just go through one other thing. You can also create token ignore lists. Now, what this would mean is if you get airdropped shitcoins, so basically as a marketing ploy, new projects might send you tokens without your consent, and they could have zero value. Sometimes they're worth something, but most of the time they're just worth nothing, or they could be a scam. You could add different tokens to token ignore list, and then they wouldn't show up in your wallet when you look at your wallet address, or any of the people you're viewing on chain. Now that doesn't mean that you wouldn't have a reporting requirement for them if they did have value. If you receive an airdrop and it has a value, then you have to report that as ordinary income on your tax return. So just because you ignore it in here doesn't mean that that kind of eliminates your responsibility for that. But just from not having to view those shitcoins in different reports that you export, it can be helpful. Oh yeah, one last thing I wanted to take a look at real quick is the export function. So there are some great tools to be able to get data off of chain, but if you're doing it manually and you don't, you're either not paying for them yet, or you want to just view all the transactions in a wallet, you have to do it when you're doing it from Etherscan a couple of different ways. So there are general transactions, which are anything that's transacting in ETH. So this would be like the gas fees that you're paying. For example, here he interacted with a DeFi lending protocol called Aave, and he spent, even though there's no value in ETH, he spent a certain amount of gas in order to get this process and in order to withdraw his ETH from that lending protocol. Here he approved a transaction. So these all matter because you're spending gas on them, but this is just going to be ETH related transactions. So here he sent 28 ETH to his vault. So this is probably his more secure vault, his more secure crypto wallet. But we're also seeing approve, repay, borrow transactions where he's not actually spending ETH, he's just spending the ETH for gas, right? So we could download all of these. We could come down here and click download to CSV, right? And then we could combine that CSV with internal transactions. So this is like a transaction where he's interacting with himself. So like, for example, Coinbase 10 is probably his Coinbase wallet, and he sent 12 ETH from Coinbase 10 to his Crypto Joe wallet. So these are transfers that on chain, they shouldn't have a taxable income, a taxable effect because they're transfers, right? But Etherscan is picking these up and it's identifying them as transfers. It may not include all transfers. There might be some other transactions that are treated as transfers that Etherscan didn't pick up as transfers, but that's what these are here. Then you have, so again, in the internal transactions, you would download the CSV at the bottom here. Are you able to? Yeah, you guys are able to see. So you click CSV export. You combine that with your other transactions tab, and then we could go to token transfers. Again, we have a CSV export. So this is all the ERC20 tokens. So like we were showing right here, he borrowed 28,000 USDC from that DeFi lending protocol. So he put up ETH as collateral, and then he borrowed against it 28,000, right? And then it looks like a day later, he repaid the 28,000. And but here you can see we have a CSV export tab. So this is the reason why all these accounting and tax platforms are in business, is because yes, you can download all the data from Etherscan related to this wallet, but it's cumbersome, right? We got to combine different CSVs. It's all there. So you can use the tools to see it all on chain, but that's where these accounting and tax softwares come into play for allowing you to more easily extract this data. And then again, you can see NFT transfers. So again, we've got his Crypto Joe ox.eth Ethereum name service domain. You can download this. He's got some Sims mint passes. Maybe it's a proof of attendance protocol. Oh, he's also got a Link Style membership. So this is a cool NFT that allows you to get access to different golf clubs and discounts around the world. So anyways, so you would pull each of these different CSVs, you combine them into one, and that would be all the data for this address. So this bank account on chain would have all the transactions from inception, from the time it was created, within it, once you download each of these 4 tabs, right? And then you can see analytics, which I'm not too familiar with. Okay, it just shows you. Oh, that's a good question. So Alvin just asked how volatile might the fluctuation in gas fees be? So back in April of 2021, which was right before one of the peaks in the crypto market, you would see transaction gas fees on decentralized exchanges like Uniswap in the 300 to 400s during sometimes. They could be as low as $2 on. So yes, they fluctuate based on the network usage. So if the network is used a lot, that means there's a lot of people trying to get their transactions confirmed. And each block takes I think it's like 10 minutes. So there's only limited space. So what you're paying for when you're using the ETH network is block space. So you're paying to get your transaction into the block. And if there's a lot of competition for that, there's a supply and demand. When the demand is high, the price goes up. And that also means now ETH has implemented a burn feature where when the base fee of gas goes up, the base fee is always burned. So when the base fee is high, the ETH network actually becomes deflationary. There's more ETH taken out of circulation every transaction, meaning when it's burned, it's destroyed. So each transaction burns a certain amount of gas, and that's the base fee. You can also add a tip on top of that to prioritize your transaction. And that's what's happening in times of high gas fees, is that people are putting higher and higher tips in there, which raises the base fee because the competition for entering that block is higher. So in the example of a meme coin, if you want to buy that meme coin on a decentralized exchange, you want to make sure that if you're worried about it going up in price over the next 10 seconds, you want to include a high gas fee so that you can purchase it as quickly as possible. So that's where the competition comes into play, and you see these insane gas prices because people are either it's a new token launch and people are trying to rush in and get into it as quickly as possible because they anticipate it going up in value really quickly. So that's one of the things. And so to expand on that as well, that's where we see things like Polygon and Arbitrum and all these other layer 2 solutions that they operate on the Ethereum network. They reconcile back to the Ethereum network, but because they're a separate chain, they have more capacity because they're spreading out transactions to different chains, and then they just reconcile back to the ETH network periodically. So if you were to do the same transaction on Polygon, which functions, like I said, we can look at Polygon scan, and the layout is almost identical to what Etherscan looks like, right? It's the exact same. So, and when you use different decentralized exchanges on Polygon, they all feel exactly the same. The only difference is that it's cheaper because you're spreading out that transaction volume into other chains, and then you get the same security as you would get in the ETH network because it rolls back up to they reconcile back to the Ethereum chain periodically, but in batches. So to combat high gas fees, that's one of the solutions that the Ethereum network has found is using these scaling solutions via layer 2s. And there's bridges between them, right? So when we talk about, and I don't want to go too deep down the rabbit hole because we could spend all day here, but basically if you want to get ETH from the Ethereum network to the Polygon network, you're going to wrap it, and it's going to be called wrapped Ether. So if you see wrapped Ether, that's what it is. It's basically ETH that's held in a smart contract so that you can transfer it to different networks. Or you could, if you're purchasing an NFT, you have to lock that ETH into a smart contract, and you can't just lock regular ETH. It has to be wrapped so that it can interact with the smart contract and be held in there until either it's accepted or denied, in which case it would come back to you. If it's accepted, it would go to the user that accepted your deal or whatever. But you can bridge ETH or other assets to different networks like Polygon or Binance Smart Chain or whatever to utilize those assets on different chains. So again, bridging transactions are more expensive because they're more complex, right? So the more complex the transaction is, the more expensive it's going to be in gas fees because it requires more units of gas to process. So I'm going to stop there because I know we've gone deep right now. But we can continue. I love talking about this stuff, so we can continue more discussions about this later. But that's kind of a rundown of Etherscan. And like I said, if you're on different EVM compatible chains like Polygon Scan or Binance Smart Chain Scan, so BSC Scan, they're all going to have the same layout. You'll be able to see, different, wallet balances or whatever. And yeah, so learning Etherscan is really helpful in understanding a lot. Like probably the majority of chains that people are going to come to you with are going to be EVM compatible. I'd say if you learn how to navigate Etherscan, you're going to have 80% of crypto covered because most people interact on Etherscan or on Ethereum or EVM compatible chains. So, does anyone have any additional questions? Oh, CJ, you're muted, I think. I still can't hear you.
Can you hear me?
Yeah.
It says your mic's unmuted. I don't know. It's
Yeah,
weird.
yeah, it doesn't say you're muted.
No. Sorry.
If you want to type it up.
Yeah, you can type it up. True. While he types too, I can mention one more thing. It's a little more advanced, but when Taylor was mentioning exporting the CSVs, if you have a little bit of knowledge of APIs and you can copy some codes, you can actually set up a connection between Etherscan and Google Sheets, so it'll automatically update that way as well. And for most accounts, the free API will work. And then if you end up taking on a lot of clients and you're running everything through that, then it can get a little pricey. And that's where I think he was saying like the software comes into handy, because they'll process the APIs on their end. But for your own personal use or for a few clients, you can also update the APIs as well.
So, CJ's question: when we talk about reconciliation work on the blockchain, is it following those transactions through the Etherscan database to follow the individual transactions through? So, when we talk about reconciliation work, think of the individual transactions within each wallet that's controlled by the company or the individual as individual bank accounts, right? And so, if you imagine those bank accounts coming through like your QuickBooks feed, right? You'd have to identify what they were for, right? You'd have to identify, okay, was this an advertising expense? Was this payment for work completed? Whatever. So, if you're working with a client and doing accounting work for them, you really should have an accounting software. Gilded, Legible, Cryptio all offer accounting softwares that you can link your wallet address in, and you can classify transactions in their subledger, and then those subledgers link back to QuickBooks. So they either import journal entries based on all the transactions, or they connect directly, and then they just update that way. And they would so you would classify everything within the subledger, and then you would send that information to QuickBooks or Xero or whatever. So when we talk about reconciliation work on chain, basically it's identifying what the transactions were for, making sure that you have a beginning and ending balance that makes sense, right? We want to make sure that everything is accounted for. So it's the same sort of everything in blockchain we can demystify by pretending it's not blockchain, right? Let's just pretend this is a bank account and this is the activity from one period to the next. We want to make sure that we have everything classified properly. And then we also want to make sure that the beginning balance is there, and then the ending balance matches all the transactions that we have seen come through that wallet address, minus any gas fees, and so on and so forth. Yeah. So I think the best way to look at all of this is this: if you just take away the fact that it's crypto and just look at it as if it's a bank account or whatever that you just happen to be able to view publicly. That's the way to make this stuff less confusing. Anything else? Cool. Well, let's end it there. I think this is a super valuable video. I think this will be great. If you want to watch the replay, we'll have it in the Water Cooler Wednesday section eventually. I know Brandon's got a lot of work on his plate, so it might be a week or two, but
No,
you want
just
to
a day
review
or
this
two.
and follow along. Also, you can check out that transaction and just poke around. Like I said, everything's public on chain. So if you wanted to take a deeper dive into Crypto Joe's finances, you're welcome to do that. I'm sorry, Crypto Joe, if I dox you, but anyways, there was someone that joined the community recently that whose name they used as Crypto Joe. So I'm like hoping it's not him.
He's looking for you. Just sent
Because
him a-
I randomly picked that one transaction, and yeah, maybe I doxed him.
What do you
So,
what do you
anyways.
think? What do you think Crypto Joe was trying to do there with his $50?
Let's take a look. So I think probably, I mean, he was probably trying to get so here it is. So it looked like he wasn't doing that much volume at the time. So I'm guessing that he was just trying to de-risk. I'm not sure why he would use ETH to trade that little, right? Because like we said, it was $3.40 to trade $50. So it's kind of expensive. Maybe he was buying into a project and he wanted to, because there's launch pads where you can essentially have access to early stage projects, but you have to send the funds early. So maybe he wanted to do something like that. But then again, I don't see this $50 going out anywhere. So I'm not really sure what Crypto Joe is doing. Maybe he was paying for services on chain, and that person who he was paying only accepted USDC. But again, I don't see this $50 going out, right?
Yeah, that's what weird to me that you would pay 7% to get $50 and then just leave it there.
Right. So yeah, a little bit odd. And then we do see a transfer here. So Sodify. But yeah.
So in a case like that, oh yeah, no, I was just saying. So in a case like that, I'm kind of coming back to CJ's point about the reconciliation, and what Brian just said. Would just probably like reach out to the client and say, hey, we're reconciling the account, and what might be the reason for that, or how you want.
Well,
I mean, it's a transfer.
We
wouldn't
even need to know the reason for this because we see it's just a trade, right? So he's just swapping ETH for USDC. So in that case, he's not paying. If this USDC never leaves the wallet, we don't need to know what it's for, right?
Right.
If then subsequently he sent that 49.3 USDC to another wallet, then we would need to know what it was for. But the nice thing about viewing stuff on chain is I can see, okay, that was a swap. I know he just traded one asset for another. So that's just going to be a balance sheet journal entry where it's going to go from ETH to USDC. You'll recognize a gain or loss on the sale of the ETH. And then you have all that's the nice thing about this transaction is that we have all the information we would need. We wouldn't even have to reach out to the client. But yeah, like in the event where pretty much everything in here, we don't really need an explanation from the client, right? Because in here, he's depositing ETH to Aave. So he's putting up collateral so that he can borrow against it. He deposits 8 more. Then he borrows 28,000 in ETH, which he repays right away. And then he
the fees, though, I mean, the transfer will be on the balance sheet, but the fees associated would just be the only thing, I guess.
Yeah, if he's a business, you would show that as an expense. Otherwise, you'd add those fees to the cost basis of the asset that you're purchasing. So just like you have a shipment or a delivery fee, and you add that to the asset, you're going to add that into the cost basis of the asset.
Okay.
So yeah, I mean, just from looking at that's kind of why I like this example as well. The only thing that we would need additional information on is this incoming transaction from Joe lose.eth, which looks like it's a transfer. Yeah, it's a transfer. Hey, we would actually know from this, hey, I'll need, if I'm reconciling your taxes, hey, I need this wallet address too. Like, or I mean, hey, is this your wallet address? I see that it's transfer. I'm guessing it's your wallet address. Can you just confirm? And then we would need to reconcile this one as well. So here he's got 3.75 ETH. You know, anyways, you can go down the rabbit hole. And then that's the nice part about things being on chain, is that it's all public. And this is why you see people, if people think, oh, the IRS, you know, they won't be able to unwind this. Yeah, maybe not right now, but once they get more staff, and if they notice that you haven't been filing willfully and it's above the threshold, this could mean that, you know, they have no statute of limitations on coming after you, right? So if, you know, it's all viewable on chain. If they get some AI tools or some sort of, you know, if they contact a blockchain analytics firm to analyze, you know, your wallet, they're gonna know eventually. So yeah. All right, I think that's it for today. If anyone has any additional questions on this, don't hesitate to hit me up either in the community or wherever. I'm happy to chat more about this stuff, and we'll do more kind of more in-depth stuff. I know that we're doing a CPE webinar that we're doing on next Thursday is going to be a compliance webinar, and we're going to go through a lot of what we just went through here, but we'll do more in-depth dives on how to read stuff on chain, and we'll probably do stuff like Bitcoin as well, so that people get a better familiarity with all this stuff. So thanks everyone for joining, and like I said, reach out to me if you have any questions.